Imagine this. You're sitting in a quiet coffee shop in downtown Portland, scrolling your phone when you overhear two friends debating crypto. One says Bitcoin is the safest bet. The other argues Ethereum has more upside because of innovation. It's a familiar conversation in 2026, especially after the volatility we saw last year. So today, let's calmly break it down. No hype, no predictions for overnight riches, just clear analysis to help you think this through. Bitcoin launched in 2009. It was built to be digital gold, a store of value. Simple, secure, scarce. Only 21 million Bitcoin will ever exist. By early 2026, in our example, Bitcoin is trading around $72,000 after recovering from last year's dip. Its role hasn't changed much. It's still seen as a hedge against inflation and uncertainty. Ethereum came later, in 2015, with a very different goal. Instead of just storing value, Ethereum acts like a global computer. It runs smart contracts, code that can power things like lending, trading, and digital ownership without middlemen. Ethereum, in our scenario, sits near $3,200. So right away, the difference is clear. Bitcoin focuses on scarcity and security. Ethereum focuses on utility and innovation. Bitcoin's biggest strength is trust. Picture a fictional hedge fund in Chicago, Apex Capital. They manage $2 billion and allocate just 5% to Bitcoin. Why? Not because it's flashy, but because it's predictable. In periods of higher inflation, Bitcoin has historically attracted institutional interest. Ethereum's adoption looks different. Now imagine a startup in Austin using Ethereum smart contracts to automate payments and track logistics. No banks, no delays. Everything runs on code. Apps like these processed hundreds of billions in volume last year, growing fast as more businesses experiment with blockchain technology. So while Bitcoin is being stored, Ethereum is being used. Bitcoin is extremely secure, but slow. Its base layer processes only a few transactions per second. That's fine for a store of value, but not ideal for apps. Ethereum, after recent upgrades, handles far more activity with lower fees, and future scaling upgrades could push that even further. In simple terms, Bitcoin chose stability over speed. Ethereum chose flexibility over simplicity. Neither choice is wrong. They just serve different purposes. Bitcoin's biggest risk is competition. Other assets claim to be better stores of value. But Bitcoin still has one massive advantage: brand trust. Even people who don't own crypto usually know Bitcoin. Ethereum's risks are more technical. Concerns around staking concentration and complex smart contracts mean bugs or exploits can damage confidence if things go wrong. And of course, macro conditions matter. If interest rates fall, risk assets like crypto often benefit. If a recession hits, Ethereum's app-driven ecosystem could feel more pressure than Bitcoin. So, which could perform better in 2026? When people say explode, it's important to be clear. We don't mean overnight hype, we mean sustained growth over time. Bitcoin could continue rising steadily if institutions keep treating it like digital gold. Ethereum, however, may have more upside potential if real-world adoption of apps, finance, and tokenized assets accelerates. In a strong adoption scenario, Ethereum could outperform, but with higher risk. Bitcoin remains the more conservative choice. What should you do as an investor? First, be honest about your goals. If you value stability, Bitcoin may suit you better. If you're comfortable with volatility, Ethereum offers more growth exposure. Some investors simply diversify. Think of someone like Sarah in Denver, splitting her portfolio between both, not betting everything on one outcome. Second, manage risk. Dollar cost averaging, investing small amounts consistently, has historically reduced bad timing mistakes. Third, stay patient. Crypto moves in cycles, not straight lines. Chasing hype has burned many investors in the past. In 2026, neither Bitcoin nor Ethereum is guaranteed to win. Bitcoin remains the king of security and trust. Ethereum may lead in innovation and real-world use. The real advantage doesn't come from choosing perfectly. It comes from understanding what you're buying and why. Thanks for watching. If this breakdown helped, consider subscribing for more calm, clear crypto analysis. See you next time.